Hey there, it's Isma from fxkampala. Well, in our video today, we're going to be looking at the scalping forex trading strategy that uses the Fibonacci. And the name that I've actually given to this strategy, I've actually called it the scalping Fibonacci forex trading strategy. And within this strategy, we're actually going to look at a couple of aspects concerning the Fibonacci. And this time round, it's at the point that we actually shall see things to do with the premium discount, golden levels, things concerning the Fibonacci, and how best this Fibonacci retracement strategy will basically work in our strategy. So this strategy, one, it will work with the 5 minutes time frame, okay, and meaning that it's going to be for scalpers. Two, it is actually a trending strategy that works on the trending markets or on the trending markets, and still this very strategy works on all pairs. Now, if you actually enjoy such content and you haven't basically subscribed, please do such that you enjoy more of our videos and click onto the bell such that you're notified every whenever we release a new video. You're one of those people, first 2-3 people that are notified when this video are released on this channel. We can also share this information still to your other friends, relatives, and so on, such that they also benefit from the videos that we do share on this very channel. Well, without any wastage of time, let's get directly onto the platform, my computer, and we see how this strategy is going to work. It's going to be an ultimate one. So I believe once you actually finish the whole of this video, it will be a fantastic change or life changer or game changer in your trading experience. So join me as we go onto our PC and see how the platform works. Yes, as we reach onto the platform, like we told you, we are basically going to be looking at the scalping Fibonacci forex trading strategy, and this strategy is a scalping one. It works with a 5 minutes time frame, and for you to work with this particular strategy, you must be well conversant with how the Fibonacci works. And within our Fibonacci levels or retracement levels or levels of the Fibonacci retracement, we are basically be looking at the 0 points, the 0.5, the 6.18, and the 0.618, and then the 1 levels that make up the Fibonacci. Reason being, you know, our Fibonacci, if you happen, let me just go with our illustration. Let me first go with our illustration. So this is an illustration of how the Fibonacci levels you should consider. So we're going to consider 1, we're going to consider this, we're going to consider the equilibrium level, and then we shall also consider the 60, rather the 0.0 or the 0 Fibonacci levels. So for you that have actually been following our videos, you realize that in our videos, we've actually explained to you the Fibonacci retracement levels, the golden levels, that actually where they come out, where they happen to come from, and why are we using them on the Fibonacci, and so on and forth. If you actually happen not to watch this video concerning Fibonacci, you can actually look here or here, watch those videos, or go on our YouTube channel and look for those videos. Then you'll be in position to understand how Fibonacci works. However, even though you don't watch, the Fibonacci actually has the premium level, which is the area below the 50 or the equilibrium level, and then it also has the premium price level. So it has the premium and the discount. Usually, most of the times, they sell with the premium. We sell when market reaches the premium, we sell, and then when market reaches the discount, we buy. Just as you're going to see in our strategy. So the strategy works on both the bullish and the bearish markets. And with this example or illustration that we're seeing on our laptop is actually an illustration of the bullish market. So the market has to be first trending, as you can see, impulse, retracement, impulse, retracement, impulse, retracement. So with this, if you actually happen, let me try wrap this. So if the market actually breaks structure or breaks the higher high, then on that impulse that actually breaks, we draft our Fibonacci level starting from point A of the impulse, and then starting from point A of the impulse, then to point B, which is the end of the impulse. So this is 1, this is 0. In the middle of the impulse is where we get the equilibrium, which is 0.5, which is a golden level or a rejection point in the Forex market, and then basing onto the Fibonacci, and then the 0.618, which is also a very strong Fibonacci retracement level. So for this, I can round it off and make it to 62. Now, once we have this, the market or this impulse wave have actually broken the break of structure, and it's actually going up, reaching its peak. Then the area between 0.5 and 1 is actually the premium, and the area below 0.5 and 0 becomes the discount. Now, the reason as why they say once market reaches the area of premium, we expect to sell, it's actually once the market starts coming down, usually before I can come to that point of selling, people will actually sell. Once it reaches here and it bounces this, people will buy. That's why we actually say premium price is a sell. Discount is actually a buy. Now, for this case, we're not going to be looking at that. For this case, we in a 5 minutes time frame. For this case, what we're going to be looking at is we actually consider the level between 0.5 and 0.26 as the equilibrium level or the golden zone. Some people actually call it the rejection point, and this actually are points of our interest. In other words, we need to wait for this market to come reaching these levels. So once it reaches these levels, it's within these levels that we actually need to identify the support and the demand that coincide with the 50 level or the 0.62 levels. Now, once we actually happen, or once market decides to enter the price within the golden ratios, we actually look forward to putting our buy order, because now sometimes it may come, peruse through this, and then slightly comes back. So within these areas, we look for possible support levels, demand levels. We look for possible fair value gaps that may come in within that particular point, and then we enter the market. So in the due process of entering the market, we always consider risk-reward ratio of 1 to 2, 1 to 3, looking at this strategy. And then once all that is set, we definitely then wait for what happens in the markets after our entry positions. Now, this has just actually been an illustration, so we can go onto the chart and probably have an extensive look of what it may look like in the live example of a real chart market structure, and then we see what we may probably expect to look for. Now, in this example, which is GBP/USD, with GBP/USD, I will actually be looking for the opposite of what we have actually looked at in the illustration. So this is generally downwards. The reason as to why I've actually done this is at least to have one for the buy and then one for a sell. Now, for this case, the illustration was for a buy, and then the practical thing on the real chart is actually something that is structured in the bearish direction, in the bearish market. So we wait for this market to break the structure. So this has been our break of structure. This time the break of structure is going to be lower low, breaking the lower low. So once it breaks this and we identify that this is its maximum, so we put our Fibonacci from point A to point B. However, before you actually can put your Fibonacci, we always need to go to the Fibonacci settings, and then we put 0.1, rather 0.0, then 0.6181, 0.5 as our areas of interest, because now this is the golden zone or the rejection level, and then the 50 becomes the equilibrium point, then this one becomes the premium, and then this one becomes the discount. Now, here, the aspect of discount and premiumship comes in at this particular point, whereby they say that if market happens to actually be in premium, okay, we look up probably selling or buying or what. So here you may probably look up to probably buying and then selling as well. Now, at this aspect, what we're waiting for is we have our points in set. So we wait actually for this market to come. Once it reaches the golden levels, then we put our buy order and then rather our sell order, expecting this market to come further down like this. So we look for possible support and or supply or demand levels that may be within the equilibrium or the golden zone, and then have a reason on why we should probably sell for this particular point. Now, once you actually happen to look at here, this particular point, you realize that between the 0.5 and the 0.618, the golden zone, there is actually a fair value gap here that needs to be filled. So by all means, the market has to come fill this gap. In the due process of filling of this gap, then we shall take an opportunity to sell once the market comes to this particular point, which is our equilibrium level, and then we put a sell order for us to profit the market. So the strategy is very simple. It's very easy. Make it as simple as possible. Most importantly, make sure that you identify the market structures, either bullish or bearish, such that you know the right thing to do, and also perfectioning onto this strategy that we use when we are trading. So if you enjoy such content, go to our other social media platforms, that is TikTok, Instagram, Facebook, and watch for this related information. And you can keep sharing for your friends, families to enjoy such content. And we also put our contact within this video in case you enjoy our content and you need an exclusive, mentorship service. Don't hesitate to contact us. We shall be in position to help you out. I will request to stop from here. Have a lovely day. Bye-bye.